What's going on, YouTube? Welcome back after a long holiday weekend. Time for another recap. Hopefully everybody has all their fingers. Happy 4th. So let's hop into it here. A couple different theses here, looking at a couple little tiny guys here. We had some gaps overnight. We were playing at the open there. I had some decent little PAs. Then we're looking for back test on certain anchors, right? We had all the way down to like 493.91, but these ever calculate, right? So they keep coming up, up, and up as we go. And we were talking about 2 days ago anchors, which last trade day never got a tag. And today we're looking for the downside first before they force up, right? And why is that? Why is that? Why was pre-market super strong? It was very easy to read on the scam up here. And then I posted this guy right here for another one just out of the gate. I had a 666% Fibonacci and I said short, and I gave you guys a big old fancy box. And then I said target, and I gave you guys a big old fancy box. And this is what we do during live trading a lot of the times for my premium group in Discord, since we do live trade every single day, and we try to help people teach and identify these trades as we share our own. And this is what this is right here. So with that short right there and a big move up, said it was too easy, made a quick little 1,800 bucks off that one, off the early morning dump. And then we also had a lot more stuff. So let's get into it. Now, Qs today, this was the fun one, right? So I made that nice little jam here for short to the golden pocket. Now we got an algo right here. Let's go to the 5-minute chart first. And we took the algos high low in pre-market here. So this guy right here, 7:30 a.m. And I fibbed that out. And what I did was I seen an opportunity to go in between those fibs for the day. So we actually had a couple really good trades leading us up to about 3,300 on the large account. 3,000 on the PAs, 1,700 on the PAs, 700 on the PA, a whole bunch of nice little green PAs there as well. So that first trade that I posted on Twitter, that was the rejection of the 666 fib right here, 496.64. And I said it was going to come down to the golden pocket. And that's what we got. We got the opening morning pop, hit resistance, dump to the golden pocket. So we had a beautiful point system there, all hit and done. And the cool thing about this one is how we use Fibonacci's. I use them actually almost like gaps, right? So when that second candle of the day, second 5-minute candle, led all the way back down, I'm going to zoom in real close here so you can see this is the exact bottom of the algorithm, okay? And that last push down that we had, our first attempt push down, left a gap there. So I called another short that was going to come back down and fill this up for the Fibonacci to be complete, okay? If you look at it right here, the opening range, right, the opening push candle, let's shrink some of this down, already hit the top side of the fib box, right? So we always fib out these algorithms here. We put a fib box on. And if you're above the golden pocket, usually you'll run to the top of that fib range, right? And then walk back down, golden pocket, hit, and then down again. Now notice that's because this gap was left right here. And that's why I said, well, we finished the top. We already have data on the top side of the golden pocket on the top of the fib, but we're missing data right here. So we called another short to come all the way back down again from this push. So we actually took this short right here at the failure and came all the way back down and slammed it into the bottom. And then I said, well, it's pretty good bounce point is yesterday's highs on SPY. So for Qs, these algos were all played out. And then we had another long, he had another long scalp. We had 5 for 5 here, all green. And on the minute chart here, we had an intraday gap be developed. And you know how I am with gaps. If you follow any of my stuff, I'm extremely cautious and well aware of gaps and how they like to play out. So right here on the minute chart, you see we have a minute gap in price action. And then we had this large dump all the way down. And I'm like, oh man, we're going to come back down to some of that double bottom support 200. So right as this started to come back up and consolidate right here, right near the golden pocket, I said, oh crap, we're holding 496. I said, I might as well go long right back to the gap. So that's exactly what happened. We took it right here long into the golden pocket, shroop, right back up to the gap fill, and then wiped out down again. So this is another beautiful scalp. When we have these intraday 1-minute gaps on SPY and QQQ, we do target those because a lot of the time, not always, they do fill same day. So we did leave that there, came down, found consolidation, went long in consolidation, right back up to gap, and that was another long, okay? So is the SPY's case. Let's get into the SPY. So I said that there's not any catalyst. We got Powell 2 days this week. We got CPI later. We don't have any catalyst for SPY to hold gap and go. It's going to put in a small candle on the daily charts. If you look at the daily, we've had a huge 3-up runner. And most likely we're going to calm down because things happen in threes a lot of time in the market. 1, 2, 3 push-up days, beautiful force ups with no back test of anchors, dailies, intraday anchors. There's many, many things that we need to back test support on, and maybe Powell and CPI will get us there. So not calling a top quite yet. We'll see what happens tomorrow at the Powell and the next day. But because of this 3-up, I said most likely we're just going to put in a all-time high small candle and we're just going to chill. It's not going to be any kind of volume. We have no data. We have no Fed speaks. We have literally nothing going on this morning. So you're going to have a small inside day after a 3-up force up. And that's what we're looking at coming into right now. But the cool trade about SPY was we had mass divergence. So if you look in between Qs and the SPY this morning, right, not only do we have Qs on all this breakaway downside all morning, you have SPY doing the exact opposite, right? All the break upside pushing into those all-time highs. So what we did here is I assume because no data and no Fed speak and no nothing else, there was no reason to hold a gap and go except for maybe low volume push. Well, low volume push, we already happened last week, right? We already had that. We had a short week. We had a super low volume. It was a holiday week. We already got the force up. So coming into a fresh week like there, we're not going to keep that force up coming into this week. That's the psychology. So if the price action is way up here, yesterday's high is down here, we are in a common gap scenario. So the price action opened right here and then went up and up into all-time highs. Okay. But I said, well, we got to come back down. So this was another short we took on some of the PA accounts where we took the backside to yesterday's highs. And we said there was a good idea to come to usually yesterday's close or a back test of moving averages, right? So on the 1 minute chart, we got the 666 finally caught back up, gave it a little push. On the 5 minute, we look for the 100. Okay. So again, here on the 5 minute, you notice price action up, all-time high, down. Now notice right here, 100 EMA is in the green. That's this level right here. And we shied it right here. No tag, no tag. Those two wicks shied it. So when we push back up, I said, oh, we're probably going to fail here into a lower high system. So we pushed back up, lower high system, came to the 100 EMA. And then I said, yeah, we're going to go to yesterday's highs, potentially lose it here and go down to yesterday's close. And we got that 200 SMA here, 66 1 minute, so on and so forth. Let's take a peek at the oscillation indicators for that gap control. So we pushed down, lower high off that, and cracked all the way back down. Super good sequence. Oscillation indicators were actually working pretty decent today, right? Where we had an early cross there. Boom, on the crack. So we knew sellers were in control moving forward, and we do need to find confirmation. So as we slipped into the bottom side of the RSI, 50 and under, right, 50 to 30, that is usually consensus of downtrend starting. Same with the MAC, but MAC wasn't crossed to the downside quite yet. It's a lagging indicator, but we did get the MAC lines to cross and come all the way down to the 0 line, and then another big wash back down, which again, the moving averages and the cross was telling us that we could come down. Same with the RSI. Now, if you look at the volume here, again, working for us, we had seller volume increasing, seller volume increasing, seller volume increasing, seller volume increasing. You get the point. Every single one of these pops were shortable off of those 4 catalysts alone, right? But another reason why I said we're going to get a force up, we had a nasty pre-market where I said it was just going to scam up 100%. And this is just soldier candles, just marching, 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 marching. And we know this algo very, very, very well. And I'll give you one key takeaway here that also was a big precursor to that. So this is the volatility index. And you notice here, it's going to have the same stair step little chopper candles here that are just marching, 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 marching. It's dead in the water. That is an algo manipulation control of action. It's no ifs, ands, or buts about it. And the cool thing about this was we actually brought this up very early because the standard deviation, I'll bring up the other chart for you guys here so you can see the deviation, was actually so high, it was up into the +2 at open. And if you watch my channel, you know how I am with VIX on outside sources of +2 and -2 for the deviation. It just does not stay. There's no reason unless we're at an insane Powell day, whatever, like a quad witching. It has to be something to move the market outside that range of that VIX with that volatility. So when you start seeing here again, we're in the red, +2, complete wipeout, +1, complete wipeout, -2, and the red, right back up for a couple days to the center. Now, what do we have this morning? This was one of the biggest tall tail signs I told my group here this morning. I said VIX is in yet another gap up into a +2 hot deviation. Why is the VIX up that high in the start? It has no business being there. So the VIX was going to go straight down. Now, that was another big precursor to the pre-market long, right? Because long was just going to march down because the VIX was too high. The VIX is way up here at the start. It has to walk all the way back down to standard deviation center usually on days like today before it catches support and calms the heck down. And what does that mean for pre-market? Well, it's the opposite of the VIX. The volatility index opens up in a gap up into super hot territory, which it should not be at. because of the catalyst that we are running right now. There's no psychological catalyst to be that high. So what did we see? Well, look at the perfect march right back up. It's inverse of the volatility index, right? So we see this beautiful pre-market march up, 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 and we've seen that thing. And I said go long all the way till open and then go short. Then you could back test because we're not going to hold the gap up. So that's another big thesis we had here. Anything above yesterday's highs was going to come back down and bam into, and then we could potentially get a reversal after that, or yesterday's close. Now Qs did have a little bit more sporadic afternoon here with some of the flying high, and the SPY kind of died off. So a lot of the time yesterday's highs, like last trade day highs, when we get gaps like that, SPY can affect either or. So if SPY happens to find that support from way up here coming down to yesterday's highs, right, and then starting to bounce, it actually caused most of the VIX bounce, and that's what or the Qs bounce, and that's what we said about the Euro close to 10:30 a.m. Central. So we're not going to have any kind of crazy trades till after then. And there's another huge conjoined consolidation here where we said it probably wasn't going to go much lower than that. We're probably going to bounce back up there, and then the Qs definitely had the same plan, right? We came back up from a higher low in the RSI right here during that consolidation. We had a cross to the MAC back to the upside in the 5-minute, went right to hot. We had a huge push back up, so on and so forth. We had a lot of continuation. So last but not least, let's get into some of those anchors. Okay, so we did post a lot about those anchors and those back tests that we were looking for, and as they fully take their time recalculating, chasing the price action up, we aren't quite there in any of the long-term blue ones that I wanted to see, but we did grab some near terms for some of those shorts, like that fib, and they did actually come and chase back on quite well. So here, last trade day, now again, we only have this one that didn't get a back test yet, and this one we can use because I was doing a little tester here. There we go. And I think those two are the ones I left on. Yep. So these higher lows, these interesting little wicks right here, are where I'm anchoring that VWAP, and I'm looking to the next day, right? Because we have no price action that came back down and touched this one. This wick shied it, this wick shied it, this wick shied it. We have no actual tags of these two anchor VWAPs. So when we have that, and especially in multiple cases, which we don't really get, especially with these blue ones here. We do have a couple tags here, but these guys right here, these blue ones, don't have back test on the top range, same as the top range of these orange guys I just made. It's in the top of those higher lows. So when we were shorting this morning under the Qs on the way back down, we used the early anchors in the pre-market. We'll remake these in a second, but these were the macros. So we expected a push out of the gate, pop, fail, and then coming back down to the anchors that needed to be back tested as support before we head back up for a nice big move higher, right? And I assume we're actually going to continue the short play, in my opinion, because I think we're going to come back down even in the Powell day or even through the night. We're going to open up. We're going to come back down for some of these blue anchors unless we get some kind of crazy random wash in the next hour and 20 some minutes here. We'll see if there's any kind of reaction to that or some kind of global news that hits. Who knows? But right now, for instance, coming into tomorrow, I think Powell and the rest of the spook shop here could really scare us and spook away that price action up here. I just think we have too many anchors that we need to be back testing and to be getting to. And last but not least here, I want to get into some of the daily anchors as well, because we do follow a lot of these daily anchors. So coming back into the daily anchors, this is another really big precursor we take for swing. And you can see right here in SPX, fully, we have a prior all-time high anchor. These need back test a lot of the time. So what's going to happen here is we're going to take these anchors, we're going to draw them from prior all-time high events, right? And we're going to grab the highs. And this is only for when these things move outside of good range, right? They break out of the VWAP range. So if this is anchor 1, anchor 2, you see price action in the last 3 days that we're talking about, that run up, right? 3 up. The 3 up is done. And a lot of the time, markets come in threes and they change. For example, look at the daily chart right here. Red candle 1, red candle 2, red candle 3, change. Green candle 1, green candle 2, green candle 3, change. It happens in threes. Not every single second of every pair. That'd be way too easy of a pattern for the market. It's not just going to hand you these every day, but it's a good, tolerable memory you need to understand. So 1, 2, 3, same thing right here. 1, 2, 3, gap and go. Things happen in threes, okay? Plain and simple. I'm not going to get into the huge teaching session on that one because a lot of my premium students need the info too, right? So with these 3 ups right here, now you can see where we're ending right here. I just kind of gave it away, but these top down anchors, top, right, pointing down, catching up is extremely important for them. So these become back test levels, right? These anchors, because now if we're run away in a 3-up, the second we get a confirmational turnaround, I don't care about all this running away from the anchors and all of that stuff. It doesn't matter one bit. Once we get a turnaround up here, like a red candle start, pushes down, and let's say we create another lower high structure, and then the candles start walking down, or maybe we just get 2 walk down candles, right? And all of a sudden that big giant candle comes like this. Well, where is it going? Well, intraday, we're going to line up these anchors for the back test to find intraday support on that drop down and short targets. So when this thing starts to roll, and I'm thinking tomorrow and the next day with Powell, because we had a 3-up, we at least have an opportunity to come back down and test some of these momentums to the bottom side, right? And Qs, this one's a little messier, but we have a lot of them on Qs that need to be back tested as well. Prior all-time highs that have never been tested. This one has. We can move this one over. Bunch of prior high. The prior highs in question all need these back tests, right? So you can see on the daily chart where we use the bottom ups too on rolling support like this, and you can see here low anchor, no tag, no tag, no tag, no tag, and then all of a sudden you get a big old red day reversal. It comes all the way down and then reverses. Well, where did it hit? At the calculating anchor VWAP, right? That's why we use these a lot of the time. So when we see, again, the top down, it gets blown out of the water like this, we need to back test said VWAP, back test said VWAP, not this one, but both the top ones. So the last 2 pieces to the pie here I want to see is some red day Powell starts here. And even if you get one more little flash up day in the Powell, I want to see some back testing into these anchors. Watch for those. So back here on the 20th, back here on what, 27th or so, we have these 2 top down anchors that we do need to back test. We do need to get back to in order to have a healthy back test of what this run melt up is going. And again, we do have earnings coming up soon, so we could perpetually see some change in momentum and change of heart in the market here near some of these exponentially crazy highs. So with that being said, watch a couple of these daily top down anchors for the back test once we start rolling. I'm hoping it starts this week. It's looking really good to kind of stall out during the Powell and maybe a CPI back test of at least the anchors, right? And even if we get my 8 to 15% I've been waiting for here on the next big pullback, because that's also going to be a buy in my opinion, depending on what the earnings do. And we'll see some of these gaps just need to be back tested. We've created so many gaps to the upside now. It's something else, man. You can just see 1, 2, 3. Oh, that would fill 4, 5, 6, 7, 8. I mean, something's got to give eventually, right? Market can stay rational longer than you can stay solid, like always. So you guys take care. We'll see you on the next. If you find any value in these videos, hit up the description. You want to try with us live? We got links in the description. We got top step codes. We got Apex codes, get you that discount, and you are support the channel if this brings you some value. So I hope you guys take care. Trade safe for the rest of the time. We'll see you on the next.